What are the themes so far for 2026?
Well, it's pretty clear right now, and this is, of course, our March survey of supply managers in 9 mid-American states. From that survey, we can tell the big theme, of course, is what's going on in Iran, the war with, or conflict as it's called, with Iran, and that's really causing some real problems. And of course, not I'm talking about economic now. The other military, I can't comment on that, shouldn't. But anyway, on the economic side, this is putting the Federal Reserve in a rock between a rock and a hard place. And as one of my students says, I said, translate that into Nebraska. I grew up in Georgia, so Georgia is a rock and a hard place. He says, damned if you do and damned if you don't. That's what the Federal Reserve is right now. Cut rates because the economy's slowing down very quickly, if we can say that. How can you slow down quickly? The economy is slowing down quickly. At the same time, you got excessive inflationary pressures, and that's supply, for those who are economists out there, supply side push for inflation and demand pull inflation. The demand pull is going, there's less pressure there, but on the supply side, we're seeing cost push. So that's what's going on. Again, not any hiring to any extent at all, and we're seeing layoffs, some layoffs as well. So all in all, not good what we're seeing out there. Both agriculture is still hurting. That's this part of the country. Manufacturing doing somewhat better. So I'll talk about that, the better part of the manufacturing side of the mid-American economy.
According to supply managers in the 9 mid-America states, how is the economy performing?
The March numbers were very good. I should say very good in contrast to what we've been seeing, the highest numbers since March of 2025, and this is March of 2026, of course. 55.6 was the reading, up from 54.7 in February. Of course, that's good. That's in a range, I'll call it solid, okay, and solid. The import numbers were up, but still below growth neutral. Import reading 46.4, up from 42.5 in February. The export numbers likewise were up. The number is 48.6, up from 47.2. And 61% of the supply managers indicated that Iran, the conflict, the war, has had some negative impacts on their purchasing decision. Now that's 61%. 56% of the supply managers think the Fed should have reduced rates at their March meeting. Now, I have to say I'm on the other side of that. I think the Fed took the correct approach in their meeting in March, and I think they'll take the same approach in April and not reduce interest rates. But that's later on in what we're going to talk about later on. Let me bring up the chart there, and you see in beautiful Creighton blue there the overall reading for the month of March. You see it's ticking up there, and like highest since up here, if you look at 56.7 in March of last year. And look at the rural Main Street. Now that's agriculture, that's rural areas of basically the same state. So you see the rural Main Street economy that related to ag, connected to ag, linked to ag, not doing as well.
What inflation trends are you noticing?
Well, as I said earlier, the conflict in Iran is having some significant impacts on the inflation outlook and the inflation readings. 69.4 in March, and that's up from 60.2. So we're getting in a range where you're seeing, I won't call it excessive inflationary pressures, but more higher. And this survey was administered before the increase in oil prices. The U.S. inflation remains well above the Federal Reserve's target. Their target, of course, is 2%. Now, they changed from, is it the CPI you're looking at or the PCE? I think it's well above both of those, either the PCE, personal consumption expenditures, or the CPI. And the Fed's favorite inflation, they say their favorite, the PCE, personal consumption expenditures, it's well above, or it's above 3% year over year. Supply managers expect prices to rise by 2.5% over the next 6 months. Of course, multiply that by 2 and you got 5%. So 5% growth in the wholesale prices, the prices these supply managers are paying for their inputs and their supplies.
What were the hiring trends?
Hiring for March. Wow, we had a reading that's 50.7. Now, obviously, that's only slightly above growth neutral, and I'm jumping up and down because after 11 straight months of below growth neutral readings, it's the first time above growth neutral, 50.7, and that's up from February's 49.2. And it's over the last 12 months, you're still seeing year over year growth in manufacturing, not there, not much. At the national level, it's actually negative. So we're probably still seeing negative year over year, but over the last month at least, we saw some growth in hiring in manufacturing in the 9-state region.
What is the economic outlook?
I expect the Fed to not change rates on when they meet April the 28th and 29th. And I'd say there's only a 10 to 20%, maybe as high as 25% likelihood of a rate cut. Now that could rise. Now it'll depend a lot on the reading we get this Friday from the employment report. I expect it to not be good. It was not good at all the last time. February was we lost 92,000 jobs for February. We'll have to wait and see for March. The Fed is caught again between a rock and a hard place. Too much inflation and so much of a economic slowdown. We call that, when it's official, that's called stagflation. Not there yet, but we're moving in that direction. Keep an eye on what the Federal Reserve's balance sheet. Look at that number. Currently is $1.1 billion per day. What does that mean? It means the Federal Reserve is buying $1.1 billion of U.S. Treasury bonds in the open market. Now, what does that mean? That means the money supply is still increasing. So what does that mean? It means the long-term interest rates, while they will be rising a bit, are not going to rise as much as absent the Fed's action. So that keep an eye on that. The CPI month over month, I still don't go for the year over year. I think the changes over the last 3 months, annualized is the best measure. That number's coming in right now at about, we're in the range, the last 3 months annualized at about 2.7, 2.8, something like that. Long-term rates will move higher. I think we're going to see those too much inflationary pressures, even with the Federal Reserve increasing the size of the balance sheet. Keep an eye on the bond market, as always. That's where the smart money is. The yield on the 10-year Treasury is what the number one thing you need to watch. It's in the range of 4.4 to 4.8. In that range is okay and indicates more inflationary pressures. Above 4.8, hold on to your seatbelt. Keep an eye on oil prices right now, of course. Staying above $100 a barrel would be an issue. I think it's going to move back down, in my judgment. And once we get some closure in Iran. Now, if we don't get any, if the Straits of Hormuz remain closed, oil prices will move higher. And we're talking about national ISM readings later on this morning. That's the reading for March. I expect that number to be up as ours was up. Listen carefully to what the members of the Federal Open Market Committee meeting, what they say. And what they've generally been saying is not much. They're in a quandary right now, and but if they give you some direction, listen to them. Junk bond yield and the 10-year Treasury, that gap has been widening a bit. Now that's investors are getting more sane out there, in my judgment. So anyway, watch the price of gold. Although the gold is that's not much of a. It was, we thought, a hedge against economic calamity, downturn. It hasn't been. Of course, when we invaded Iraq or put missiles on Iraq, we expected that. We economists expect that to push gold prices up. And that didn't happen. Actually, they went the other way. I think gold prices, keep an eye on those. And what they will indicate is inflationary pressures moving up. But also, if the Fed should reduce interest rates, that would also be something that would push the gold prices higher. But I don't think that's going to happen. So that's it for the month of March. Ernie Goss here for the Mid-American region survey of supply managers in 9 Mid-American states, stretching from North Dakota, Minnesota in the north to Oklahoma and Arkansas in the south. Of course, that's right down the middle of the country. Until we meet again on the first business day in May, May your economic cup runneth over, and thank you.